Okay. So class chapter 4 is about the elements of the financial statements. The elements of the financial statements are your assets, your liabilities, your equity, your income, and expenses. These are the items that are presented in your various financial uh, statements. Very quickly, paragraph 4.3 class tells you of the definition of what an asset is. An asset is a present economic resource controlled by the entity as a result of past events. Clear from this definition class that there are three important aspects in the definition of an asset. Number one, that an asset must represent a right and it must produce economic benefits and it can be controlled by the entity. So some students class would get confused. Is paragraph 4.4 part of the definition of an asset? If you're asked for a definition of an asset, are you going to include paragraph 4.4? The answer is no. Paragraph 4.4 is an expansion, is an elaboration on our definition of an asset. But really, strictly speaking, an asset can simply be defined as a present economic resource controlled by an entity as a result of past events. Okay. Paragraph 4.4 explains to us what then is an economic resource. And an economic resource class is a right that has the potential to produce economic benefits. Now, this is one of the significant changes class brought about by the 2018 framework. Just to give you a comparison. The previous definition of an asset class, an asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. Okay? And the present definition class, an asset is a present economic resource controlled by the entity as a result of past events. Okay? So, under the old framework class, there really has to be an expectation of an inflow of economic resource for there to be an asset. But now, as long as there's a potential class to produce economic benefits, then the framework already considers that as a resource that is sufficient that would result in the existence of an asset. One of the reasons, class, why this change in the definition is introduced was to highlight the fact, class, that the resource that we are talking of here, class, is the right to receive the economic benefits, class, not the future economic benefit itself. There was confusion before as to what constitutes an asset. Is it the expected future benefit, or is it the right to receive the future economic benefit? And the answer is the latter, class. The asset that we are talking of is the right to receive a future economic benefit. The asset is not the expected future economic benefit, but the right to receive future economic benefit, class. And the intention of the 2018 framework was to settle the possible confusion. Okay? But as for your takeaway lang, class, your takeaway for today would be the definition of an asset. That an asset is a present economic resource controlled by the entity as a result of past events. Okay? But as a possible true or false question, class, it would be asked, can there be an asset even if an economic resource only has a potential to produce economic benefit? The answer is already yes, based on the 2018 framework. We no longer bother ourselves with the certainty of the future economic benefit that may be produced, okay, as long as it has potential to produce economic benefits. Now, having said that, class, again, I will have to emphasize that just because the framework will categorize it as an asset class, that does not mean that we will already recognize it as an asset in our financial statements. The definition of an asset in the framework does not govern the rule on recognition of assets. Besides, the rules for recognition of assets and liabilities class are contained in the standards. We do not recognize an asset and a liability based only on the definition provided in the framework. Assets and liabilities and also income and expenses class will be recognized in our financial statements if they qualify, if they meet the conditions set if they comply with the recognition requirements provided by the standards. Okay. Understand that the provisions of the framework is more for the use of our standard setting bodies, those that will be developing the standards. It is important that they do not limit themselves only to items that will be recognized, but also include those that will require disclosures only. Because part of the standards class will provide disclosure requirements. As far as the framework is concerned, there may be assets that can be recognized in the balance sheet class, but there can also be assets that will only be disclosed in the notes to the financial statement. Okay, so please do not let the definitions provided in the framework confuse us as to what will be recorded in our records class, what will be presented in our financial statements. Okay, the scope of what the framework recognizes as an asset and liability class is broader because they are not only limited to what will appear in the balance sheet or the income statement class, they are concerned with all the information that may be required, that must be presented in the financial statements. So, as far as the framework is concerned, it will consider an item to be an asset or liability, even if it will not be recorded in the balance sheet, if there is a need to provide information in the notes to the financial statements. Okay, so I do not want you to think that because of the change of the definition provided in the framework, that the recognition requirements provided in the standards also change. Okay, if you remember, the framework does not overrule the provisions of the standard. We will still have to follow the standard. Okay, so very important kasi this part would be a source of a lot of questions. This being a new development in the 2018 framework.